Manufacturing activity has grown for the first time in 6 months.
The country's official Purchasing Managers Index, or PMI, came in higher than expected at 50.1. That signifies expansion for the first time since April.
Non-manufacturing PMI also rose to 50.2 in October.
Well, Xiaolin Chen is head of international at KraneShares. Hello to you. How much of this PMI uptick then is thanks to China's recent stimulus, do you think? And do you think it's sustainable?
Thank you for having me on your program. Obviously, this is 1 month's data, full months of data after the announcements of the accommodative policy in September. It's still too early to fully assess or judge if the full policy is taking a whole effect, but it's very good to see as the first full month post the announcement of implementation of this accommodative policy, that data start to show improving sign, which is a good start, which is what you'd like to see. As now all the policies start to rolling out, like the stock repurchasing program, 500 billion is already rolled off. Onshore asset managers started to issuing, the relending program. So it's good to see data is on the accommodative side, on the improving side, shows signs of improving. Also, policy is rolling out. How sustainable this is, it really hugely depends on how quickly the Chinese policymaker can roll out that policy. Given from the announcement to first initial rollout, it's really 1 week apart from that. I think they are very efficient in doing or implementing what they said they will be doing in action, which I do expect to see more data coming in the coming month to continue on the greener side.
Yeah, so as you say, very early days on this, but do you think that this could then drive more growth, potentially?
That is the goal at the end of the day. The policymakers in China are heavily pressing in uncertainties outside of China in export demands, in currency pressures, in geopolitical, in election, in all the different issues that everyone knows about. They're being very conservative, which is great news for the domestic consumers, because that means they would focus on the last, which is the most strongest bullet in their pockets to help on consumer side, which they have been doing that. So hopefully in the coming months, more policy towards consumption side. Consumer produced or contributed nearly 40% of China's GDP. If they do it right, do it quick, this is definitely going to materially support China's growth from here.
Okay, and China's Standing Committee of the National People's Congress is scheduled to meet next week. It's widely expected to release details on fiscal stimulus. What kinds of measures are expected, do you think, and how might they impact PMI?
I think it will be hugely on the exact number, particularly on the physical, which I call them the last piece of the puzzle of this policy bazooka, which is the physical front of what's the government spending look like now, remaining of the year, and also going into early of next year. You would expect if the ultra long-dated bond would get hugely announced, what would be the number market expecting? A couple of trillions in renminbi to be announced in that front. I am expecting more news on corporate fronts, on resume of the IPO market for China onshore markets, and more supportive for small and private companies to play or benefit from this round of policy. All of that is obviously catching a lot of a spotlight in recent week, which is rightly do so, because given all the policy in place, market wants to know what's the next. But I do think the Chinese policymaker has a lot of dry powder on the table that they can implement. They have the largest FX reserve in the whole world, which they can still pull the trigger. They haven't been massively issuing ultra long-dated bond for years, if not near a decade. They still have that toolkit. I do expect them to be using all these toolkits more decisively to support the economic growth from here.
Okay, well, we shall see what happens. Xiaolin Chen, head of international at KraneShares, thank you very much for joining us.
Thank you.